What up, HyperChange? Welcome to another episode. I'm your host, Gally. We're here to talk all about the future tech, HyperChange, just the era of perpetually accelerating disruption, how I'm investing, how I'm thinking about all of it. We don't have a guest this week on the show, which, hey, could be a good thing because I'm just going to be riffing. And I've got some I'm trying to up the alpha a little on the show, maybe up the comedy, up the hot takes, up my predictions, not really just saying the news, but kind of really riffing on what my thoughts are. So the first thing I want to scheme on, which I think has been a very underrated development and is going to set the tone for the whole episode, which is, I guess I'm overusing the term hyperchange, but we're really in the hyperchange era. Things are moving so fast, and I think financial markets and startups are having a difficult, just the amount of volatility I'm seeing of like Claude going to 30 billion in revenue, other company, Figma stock and Adobe stock crumbling today on the news that Claude is coming out with its own design thing. I mean, it's the way things are changing, the way huge companies are being disrupted and little companies are coming up. It's crazy right now. And I think one example of that I've been thinking of, which I don't think has been getting a lot of hype, is XMoney. So we all know, X, technically owned by SpaceX now, which is crazy because it's owned by XAI, is readying the launch of XMoney, which is in many ways the full vision of what Elon wanted to do at PayPal, a sort of everything app, or that's what X is aiming to be, an everything app, and not just everything in terms of news, but payments. This is a huge part of, if you look at something like WeChat in China, what made that so popular as the everything app is the integration of the ability to send money digitally, which sounds simple. It's like, oh, we have Bitcoin, we can just send Bitcoin to whoever. But the idea to get all the licenses in every single state to be able to offer, an insured account where you're able to hold Bitcoin or stocks is actually very complicated. So XMoney is actually in the process of launching right now. I want to show y'all. This is what my scheme that I've been having with Grok. XMoney is in private beta right now, early access beta. I don't have it, but apparently some people do, and they're spending money. But the crazy thing to me is this is going to come with not only the ability to send money a la Venmo, but it looks like XMoney is, first of all, also offering 6% yield on interest, which is insane. That would be the highest of any bank. They've got to be losing money on that, but maybe they're doing it to win users. Could be a smart strategy. But the real thing that I think is so crazy is if they offer direct in-app stock trading and crypto trading. So, this is the news that I feel like has gone under the radar and could really shake up the world of, right now we have Coinbase, Robinhood, Public to some extent, are disrupting the legions of Vanguard, Fidelity, Charles Schwab. We're talking about a massive move for where people trust to keep their money. And it's been for 10 or 15 years, I'd say people have been moving to these newer sort of digitally native alternatives. But now that whole thesis to me is in question because X, if they launch the ability to do brokerage trades, like essentially you could click, you're already reading about a stock on X and you can just click one button and buy it. You don't have to open up Robinhood. I mean, that is a crazy feature. And to be honest, as someone who's watched this brokerage space evolve, like we just saw Robinhood do this crazy promotion a couple months ago to get Tesla shareholders, a 1% match on your money if you move it over. These brokerage apps, they're just a layer for you to interact with the financial market. It's really easy to switch. The sticking cost is actually not that high. And so I feel like XMoney here with the right promotion, if they're offering crypto and stock trading, those are the two killer features. And I almost feel like this could overnight eat into, maybe not everyone from Robinhood and Coinbase will transfer their money to X, but this could eat up a lot of their growth in new accounts. I mean, I think there's a huge overlap in terms of the users for X, Coinbase, Robinhood. It's all the younger, digitally native, new demographic. And so I don't know. I think this is crazy. And this is also an interesting stat to throw your way. X has about 500 to 600 million monthly active users. Robinhood only has 24 million. Coinbase has 110 million verified users. So X is already way bigger than those networks. So I'm very curious what's going to happen here. And XMoney has been hyped by Elon for a long time. They've been talking about the potential. It's been behind closed doors, getting all the licenses. So who knows if it will actually launch and be disruptive, or it will kind of be a nothing burger. That's still TBD. But I think this could be one of the biggest evolutions of X since Elon bought the platform, potentially if not the biggest. I mean, right now, Twitter's stayed pretty much the same, I guess, for the integration of Grok, which has been big. I can ask Grok questions. I can check the authenticity of posts with Grok. But this ability to buy and send money is going to be a huge needle mover for X. Not only is it disrupting Coinbase and Robinhood, but I think it's going to make X a ton of money alone. Like, it could be very bullish for them. Is that driving any part of the SpaceX thesis for $2 trillion because SpaceX owns X? Probably not right now, but that doesn't mean it shouldn't. I mean, banking is one of the largest sectors in the entire global economy here. And Elon has reiterated so many times this vision to build the all-in-one everything app that will include payments. And he had this vision at PayPal to offer all sorts of financial services. We're talking about lending. We're talking about mortgages, just every kind of current financial transaction you could think of could be run through this digitally native bank. So I don't know. This is one thing I am watching very, very closely because I feel like Robinhood stock and Coinbase stock have been bouncing back from their lows the past couple of years, have been on fire, have been, kind of crushing it as these new companies. And I don't think anyone is pricing in the fact that there is a huge, well-funded, incredibly powerful competitor about to enter their space. And this kind of ties into the broader thesis and theory that I've been seeing that I wanted to discuss, which is years to payback. So this is a philosophy that I think is a super helpful way to frame how to value a company. How many years of its profit will it take to pay back the market capitalization of that company? If you're looking at a company like that's worth $100 billion and they're making $5 billion in profit a year, that's 20 years to pay back. It's going to take them 20 years of $5 billion in earnings to pay back that $100 billion market cap. So, maybe their earnings grow, so the years to pay back is lower. Maybe they shrink, so it's longer. But this idea that the stock market right now is valued, almost every company you buy, let's say the average P is 20, that's a 20 years to pay back if earnings are flat. So you're basically assuming that these cash flows will last for 20 years at minimum. And I think this assumption that's been baked into the stock market has also come in a time where things are changing slower. Now we have companies getting disrupted like overnight. So if we look at Figma stock, for instance, this is a super interesting one. Super hot company that came out, a Peter Thiel fellow who started the company. Figma, amazing product that a ton of designers use. People say they love this product, but the stock has been totally a nothing burger since IPO. At first it was like, oh, they're opening 100 a share. They're just going down because the lockups expire and they were overvalued. But now they've been getting crushed and the business is still growing at like 40% a year. But they're getting crushed in terms of valuation, and a lot of it is because Claude just came out with Claude Design. And now Figma had been going down before Claude Design came out, but it's crazy to see, and you can look at a company like Adobe, who is making huge amounts of cash flow, insanely profitable, but their stock has been hit as well. So the market is getting very concerned, and I think rightfully so, that in the era of hyperchange, things are moving so quickly, we cannot count on a business model that is here yesterday to be here tomorrow. And therefore, the value of these cash flows, the multiple on these cash flows should be greatly depressed. And so I think that's why we're seeing all this volatility, like stocks like Salesforce are crumbling because couldn't AI just replicate their whole business? I don't know. The market is grappling with that. And if you're looking at Salesforce and you're expecting 30 years of earnings to buy the stock, that just doesn't seem like a good bet. Like if you actually think that through, like I almost wouldn't want to bet on any company's earnings in 30 years from now because there's so much uncertainty. And I think the market is grasping with this, and we might be kind of overpricing it in, let's say, where the market is freaking out a little bit too much, saying change is going to happen, Adobe's going to get crushed, blah, blah, blah. But will Adobe actually get crushed? I don't know. I think they're probably going to be okay for a long time, or maybe not. Because, and I think it's interesting because I get this in this debate with my homies of like, is Adobe a great company, And yes, it's an amazing software that people use. It's super sticky. Everyone's still using Adobe. They're integrating new AI features. But I don't think that's the threat to Adobe. I think the threat to Adobe isn't that these designers stop using it. I think it's that people stop using those designers. Humans with Adobe are a certain cost, a certain ability, but now you have humans with Figma, with Canva. Now you have humans with Claude Design, who maybe are way powerful, way more faster, way cheaper. So it's hard to notice the disruption that's coming in a way, if that makes sense. Like, I mean, the market is speaking here very, very clearly. It's saying even though Adobe is an amazing company, let's look at their financials here. Like revenue, still booming every single quarter, up from 5.87 billion up to 6.4 billion in a year. They're making huge amounts of profit. Operating income 2.5 billion, moving up. That's 10 billion a year in profits for this company, Adobe. But right now they're only valued at 100 billion. So they're valued at like what, a 10 times PE? I don't even know if that's right. You got to double check that. But this is crazy. So Adobe, a company that's been around for 40, 50 years or whatever, dominating its industry, the market is saying we don't feel comfortable predicting this out for more than 10 years because of how fast things are changing. So I think now is a very interesting moment as investors to, because that's an opportunity where Adobe looks like an extremely cheap stock, or is this actually a fundamental change in markets where, I don't know, because then I'm like, well, if we can't count on Adobe and that business is only 10x, then almost shouldn't every business be seeing massive multiple compression? And right now it's just software. That's what seems to be most vulnerable to this AI disruption. But what if it's the second Optimus comes out, it's, everything. Like I'm thinking about like something like Chipotle, right? Like Chipotle, this idea of distributing food in a certain way, preparing the ingredients with human labor, serving them. What happens when self-driving cars come to disrupt delivery? Is Travis Kalanick's cloud kitchen going to disrupt all of that? Or is Optimus going to be used as labor? Will Chipotle integrate Optimus, or will a startup use Optimus to come up with a better way to prepare food? Will we even be eating burrito bowls in 10 years? I think, in some ways, previously, before the AI revolution, we were almost too naive to think things would continue so far in the future. But now we're almost like too excited about disruption. We're overpricing in disruption, it's potentially. And people are, maybe there's opportunities here. But I'm personally, I don't know. I'm kind of in the camp of staying away from all of this because I don't know. On one hand, I'm saying, the market's, pricing in too much disruption. But on the other hand, if I really think about it, I am not comfortable owning almost any business right now. There's only two stocks I own right now, Tesla and Lemonade. And I think they both benefit massively from AI. They're on the right side. I see them using AI to disrupt all of their incumbents. Now, could someone disrupt them with AI? Definitely. And so that's a risk. And so I almost feel like you have to be more vigilant than ever in your due diligence. But at the same time, I'm not buying, I'm definitely not buying Adobe stock. I'll tell you that much. You're just like, what's Claude going to release next? I feel like you don't want to be on the other side of like competing against these AI labs because it's all about momentum. And as Elon would say, pace of innovation. And the pace of innovation at these AI companies is so much faster than we're used to that it almost feels like every single incumbent will get disrupted. So I don't know. It's just hard to wrap your head around that change. And I think this is a truly like once in a generation moment for financial markets. I don't know. I mean, this stuff people are saying about the future is getting wild. Like you have Elon calling for UBI, essentially universal high income. I mean, this is a big deal. As I'm scheming, Elon Musk just today has pinned this tweet to his page, which basically says universal high income via checks issued by the federal government is the best way to deal with unemployment caused by AI. AI and robotics will produce goods and services far in excess of the increase in the money supply, so there will not be inflation. So there is a lot to unpack in this statement, but it's very interesting. And this is an idea popularized by Andrew Yang in the presidential, debates, 5-10 years ago, maybe way ahead of its time, that now has kind of entered the mainstream. Like it's very interesting. I think Sam Altman even paid for some like UBI experiment in Oakland. Now you have Elon Musk saying, he's been saying for a year or two now that UBI is basically inevitable because of the rapid job loss that's going to happen with AI. So it is so hard to think about how we transition from a model where humans are the backbone of the economy to where humans are basically like this dead weight appendage on the economy that just gets a dividend from AI, essentially. I mean, that is a really weird place to be. And I wonder what implications that has to financial markets. Because on some hand, there's this kind of idea and joke of like, you have, 5 years to escape the permanent underclass, or you're just going to be part of the permanent underclass for all of eternity. And there's going to be, a group of people controlling the wealth, controlling these technologies, and then everyone else will just have to live with what they get from essentially UBI. And honestly, I kind of feel like that is where things are going, which is kind of a messed up thing to say, but in some ways, and it won't be like, oh, everyone either gets UBI or is controlling the most powerful technologies in the world. There's going to be gray area. There's going to be years, you're going to have excess money with your UBI. How do you invest that? How do you use it? I don't think this idea that there will be money won't exist. Some people have talked about, Elon's talked about that, and like everyone will have perfect healthcare, perfect housing, perfect blah, blah, blah. Like I guess, if you play out AI, that kind of makes sense, but it also doesn't make sense. We have limited land. We have limited resources. We have the human ego, which wants to always have more than other humans. We're always in competition with ourselves and almost like a tribal mentality. And so, one theory that I've always had on this, which I think is like kind of a hot take, but I think it's the way I view the world, which is really like we're all just kind of monkeys on a rock, and we all like to put this fancy theory on of, oh, we're part of a society and there's laws and there's governments and, blah, blah, blah. It's like kind of, but we're also kind of just advanced monkeys on this rock trying to survive, trying to procreate, trying to figure things out. And at the end of the day, that's what it boils down to. And as much as you can have your feelings and emotions about how these are going to play out, I'm almost just trying to figure out how it's going to play out. Maybe it's not good or bad, but I see the ability for people to create, this whole concept of, can one person create $1 billion company? As I was saying, this idea of the $1 billion one-person company is really cool in some ways. As an entrepreneur, it gets you excited. It's not about the $1 billion, but it's about this idea that, oh, you can create, a ton of value with one person. Your ability to do something is going up exponentially because of the power of technology. And that is very cool, but it also has this very realistic effect of the people who are the smartest with the most ambition will be acquiring so much more resources so much more quickly than we have ever seen. And I think we're seeing this has been happening. Like, we've seen the whole era of like Mark Zuckerberg being a billionaire out of nowhere from Harvard. And, it seems like, oh, of course, there's a lot of startup self-made billionaires. But at what other era in history do we have people go from essentially, peasant to king in a matter of 5 years and just do it because they want to? I mean, it's kind of cool when you think about it. It's almost, capitalism is an impressive system in that way. But I think it's just getting to such an extreme amount. I mean, we have the anti-billionaire backlash is huge. I mean, so many, 99%, 0.99999% of people are not billionaires who are not participating in this. And so it's easy for them in a democratic system to outvote these few people in power. I don't know. So it's just a very weird kind of future that we're getting to. And so then there's all these kind of theories of how do we tax robots to fund UBI? Do robots pay taxes? Is there some sort of new sales tax? Is there, I don't know. It's what happens to inflation. Elon has a very interesting comment here about AI and robotics will produce goods and services far in excess in the increase in the money supply, so there will not be inflation. So essentially, some sort of deflationary pressures from technology will balance out the inflation in the money supply so that there won't be this inflation, because I'm sure what we're all thinking is, if everyone gets $1 million a month, then doesn't the price of everything go up? Yes, kind of. And I do think there still will be scarcity. I mean, how many avocados are there? How fast can we ramp avocado production? I mean, I think the price of avocado, the idea that everything will be equally accessible to everyone and everyone will have high income, I just think is unrealistic. I don't know. It just doesn't seem to add up to me with this world, this harsh truth of there's one earth and there's very finite resources on it. And in some ways, it feels like we're already pushing the limits of those resources. And so, I don't know. This is just kind of my out there philosophical ramble of the week. But I think it's as someone who's investing in financial markets, it's really weird. It's hard to know what's happening. And I think all the way I'm framing everything is I want to be in forward thinking technology companies. I want to be invested in things that are like super duper forward thinking that are going to benefit from, that are basically building the future. I think if you're not building the future, you're going to get left behind by someone else who is. So Tesla is such a fascinating company to me because on one hand, you have $100 billion business that is essentially flatlining right now. You know, it hasn't grown in a couple years yet, and it's not even that high margin of a business. And we have a market capitalization of around $1.4 trillion, 14 times sales, hundreds of times earnings. In some ways, this is the most richly valued company in the stock market in some ways based on their current financials. So why does that make sense? Why am I so comfortable owning Tesla? The basket of technologies that they're developing, I think is looking like it will be increasingly relevant in the future. I mean, I've said this a few times, but we've never seen a startup of this size. Tesla's current business model of selling cars is not what you're betting on. You're betting on their ability to do Robotaxi, rides as a service, and then Optimus robot. And I think let's play out this years to payback scenario. It's like, oh, Tesla's only making $10 billion in profit a year to pay back $1.4 trillion. We're looking at like 100 years. 140 years. That's ridiculous. How are you going to assume that the world's going to stay constant for 140 years? Why would you pay that? That's like a 0.1% earnings yield. Like, that's ridiculous. But if you assume that I think Tesla eventually could be making $1 trillion a year in profit once Optimus scales. So that could pay back our market cap in a year. So if I'm thinking the earnings could rise to that level, then, and the years to payback would compress so much, then I feel like there's massive upside on the stock and it could be undervalued. So that's the way I kind of frame Tesla stock. That's the same way I'd frame SpaceX stock at $2 trillion valuation with only $20 billion in revenue. Well, I think SpaceX could be making trillions a year in profit and pay back $2 trillion in 1 year eventually. So that's why I'm going to buy it. It's all about the rate of change, the pace of innovation, but really just the rate of change of those intrinsic earnings power is so... like, that's everything right now. So now let's talk briefly about Tesla's earnings, because Tesla has earnings coming up this week or next week in about 5 days since I'm recording this. They have put out the delivery and production numbers, so we know those. They increased deliveries about 20% to 358,000 in the quarter. Energy storage came in a little light at 8.8 gigawatt hours of energy. They're going to have a break-even-ish quarter, but it's so interesting that the business has really, like, no one cares about the financials anymore. Like, no one's paying attention to this. This isn't really moving the stock, personally, I think, which is so interesting. I think what's moving the stock is Robotaxi expansion, Optimus, the SpaceX IPO, the Terafab, the idea that SpaceX and Tesla might combine. These are the stories moving the stock right now. Everyone seems to have almost forgotten about the core business, which I think is so interesting. So what do earnings even matter then if they're just saying the financials of a business we don't care about? Well, earnings are going to matter because we're going to hear straight from Elon Musk and the team about Robotaxi, about Optimus, and about how those things are going. Now, some people... SpaceX is at $2 trillion, Tesla's at 1.4. Now it's flipped from Tesla buying SpaceX to SpaceX buying Tesla. I've seen this theory float around a lot, so I want to address it. Is Elon Musk, in a way, sandbagging, essentially, the potential of Tesla because he wants SpaceX to acquire it? He owns more of SpaceX. If SpaceX buys Tesla, that will be better for his ownership of the combined entity. Maybe. I personally don't think there's some weird conspiracy where they're suppressing the value of Tesla and stopping the Robotaxi rollout or not showing us Optimus because they don't want to. But also at the same time, it's like this wouldn't be a good time to pump the stock unnecessarily either. You want to kind of be fair. And so what I think with the Tesla SpaceX merger, how I think this is all going to shake out is I think essentially they're going to let them float. They're going to say SpaceX IPO, see where you trade. Tesla, let's let you do your thing, see where you trade. And then we'll just combine them at the price the market says they're worth. And then it's less on, it's just kind of like a fair merger based on the market capitalizations of the company at the time. So I could definitely see that happening. I don't know. I mean, I have some other Tesla news, which I do think is interesting, like this Bloomberg article I got paywalled out of, but Tesla preparing to launch 6-seater in Model Y variant in India. India's always been a huge potential market for Tesla. 200,000 electric cars sold a year, doubling, booming market. They're shipping these from the Shanghai factory. Tesla's sold about 350 units in India in the first 9 months in the country so far. But that's about to get ramped up like crazy. So that's a new growth market we've been waiting for years for Tesla to enter. Finally happening. Huge opportunity there. There's also the Tesla Semi. All sorts of news has been coming out about the Tesla Semi truck. They're ramping production. They're putting out more videos of this thing. It's really happening. But then the question is delivering a handful, hundreds, even thousands of semis going to move the needle on this $1.4 trillion company? Almost not, which is so crazy to think about that Tesla's become so big and the hype of its potential with Optimus is so large that people are almost forgetting about the bread and butter of, this was Tesla's Optimus 10 years ago, and it is finally happening. And I think that's super duper exciting. And for what it's worth, this could be a $100 billion business for Tesla, replacing trains with autonomous trucks. But in some ways, if I'm being realistic about buying Tesla stock and, analyzing it for upside, it is really all about Optimus and the Cybercab. Like, people are seeing it. Okay, so what's crazy about Cybercab, and this is supposed to start production in April, so this can happen any moment now. But Cybercab is spotted in Boston today. Like, this is a post. They've been speaking in Florida, Chicago, everywhere. They're spotted testing the Cybercab, which is so interesting to me. And they're producing some with steering wheels, some without. What is Tesla's plan with the Cybercab? This is still the biggest question mark I have with Tesla right now. What the hell is their plan? If you go to the Robotaxi tracker here, Tesla only has a fleet of 583 cars, 96 in Austin, 487 in the Bay Area. So Tesla could make 500. Tesla's already made 500 Cybercabs. So Tesla can make 500 Cybercabs in like a week. So I just don't know. And you look at how long it took Waymo to ramp up, like 10, 12 years to 3,000 cars. So at some point in the next few months here, Tesla's Cybercab production is going to massively outpace the ability for the Robotaxi network to handle adding those vehicles. You have safety drivers, you have local laws, you have charging, you have cleaning, you have just a lot of blocking and tackling to scale that business. Which is going to take a long time. What the hell does Tesla do with these robotaxis? Farzad is going off about them putting a steering wheel in it, and they're just going to start selling the Cybercab. But who the hell wants a 3-seater? I don't know. Maybe everyone wants a 3-seater. And I know I've been riffing on this for a few weeks now, but I am just like so confused and would love someone to tell me like what the hell is going on with the Cybercab production. Like, is Tesla really going to add tens of thousands of Cybercabs to the fleet and is Robotaxi network going to boom and expand? I just don't see that happening yet. I just frankly think it's going to take a lot longer. Like, I think it's going to, so anyway, I personally don't know. I feel like the Cybercab is just not a consumer product. Maybe they can build a car on that chassis or something that is more of one and use that production. But I don't know. That's kind of like a pretty big question I have. That maybe will get answered on the earnings call. So that's why I love the earnings call, because the earnings call is this time for us to gossip with executives. Let's see what the say questions are saying. So the top questions from Tesla shareholders, what are we looking at? Ooh, Optimus V3 Reveal. So this I've actually been waiting for a long time, which was supposed to happen in Q1 of this year. And they're supposed to be talking a lot about Optimus. So the people who think Elon's sandbagging to get the SpaceX merger done, I would say this is your best theory, is around Optimus being late. Then I also heard on this Dwarkish podcast recently where Elon was, I think it came out a couple months ago. I was listening to it today though, where he says they're building this like Optimus Play facility. They're planning to have 20 or 30,000 Optimuses just like running around training in this facility, doing play to simulate, to get better, to get useful. I mean, yeah, the amount of money that Tesla is going to be spending on these new initiatives is crazy. That's also what's wild to me is Tesla's going from profit to basically back into massive spending mode. So anyway, I think the Optimus V3 reveal, they've been saying so long, V3 is the one where it's super useful. They're actually going to have it in the factory. But on the flip side, you also have every company in China, Figure, all these robotics companies copying Tesla, watching everything they do frame for frame. Maybe it's advantageous to hold Optimus close to the vest for a little bit longer. I I don't know, but that's what's going on for now, at least. This is funny. What milestones are you targeting for unsupervised FSD and Robotaxi expansion beyond Austin this year? How will that drive recurring revenue? So I know Elon's going to be overhyping this, frankly. Like, he's been consistently overhyping how many robotaxis are going to be out there, how many cities they're going to have. Not overhyping, but just being overly optimistic. And I think it's good that Tesla's taking it slow and being super safe and putting out the data and just not rushing something that's so critically important to the company. I think that's great. But this is why I love the conference call, and this is why I love Say and the retail questions. It's going to be epic to make Elon riff on this and hear him say, what are his new milestones? What is he thinking? Why I would almost phrase this as, why have things been going slower than expected with the Robotaxi rollout? What about Cybercab changes the ability for you to accelerate the rollout? Anyway, Robotaxi strategy for Europe. That's another question, which I think is funny because it's like, bro, that's in years away. Plus, Europe seems to hate everything Elon Musk does right now. So I would not be waiting for like all the regulations to be on his side, essentially. But yeah, that's going to take a while. That's going to take a long time. Robotaxi safety data. What's the bottleneck? Lots of good Robotaxi questions here. And rightfully so. I think a lot of Tesla investors like to complain about the Say questions. Maybe I'm biased because I helped Say come up with this platform, 6 years ago. And I think it's cool that retail investors get to ask questions. And I think they do a good job. Like, these are upvoted. 1.2 million Tesla shares are representing that at 400 shares. This is 500 million worth of people, dollars worth of stock that wants this question answered. And people are really pushing for this details on the Robotaxi business. And I think this just goes to show you the focus of investors. People are not talking about deliveries, ramping the semi, India sales. The focus is really all on Robotaxi and Optimus. And as it should be, but I think it's cool to see that. So AI chip 5 tape out, interesting. And this is another interesting tidbit, which some people say drove the stock up, was that Elon Musk was saying that AI 5 chips are going to be used for Optimus, while AI 4 chips are good enough for superhuman driving. Therefore, we don't need to wait for this AI 5 chip, which won't really begin production for a year and a half, to do full FSD unsupervised or roll out the Cybercab. That was the theory a lot of people had. They were like, AI 4 chips not good enough to be a Robotaxi. That's why Tesla's not going to do the Robotaxi big time until 18 months from now when the AI 5 chip comes out. Maybe, but Elon kind of squashed those rumors this week. And I think that made people be like, okay, well, maybe we should be more bullish on Robotaxi. And honestly, if I hadn't visited or been studying Tesla for this many years and had visited all their factories and seen the rate of growth on every single initiative, like every time I go back to Austin, the factory's bigger, it's more impressive, the costs are down, they're making cooler products, like they just constantly get better, that pace of innovation. So that's why I hold Tesla, because I think they're so focused on things right now that are just not in the financials and won't be for years, but when they are, will be huge. So these are my current predictions for 2026, which honestly might be too high right now. You know what I mean? So even like this, I have them bouncing back to growth to 110 billion in revenue this year from 95 billion last year. But as you can see, like kind of been flatlining here. And this has been, interest rates went up, that hurt auto sales. You had the Elon joining politics. You had, no real new products with, Model Y is the best selling car in the world. It's hard to be a better selling car than that. So this next wave of growth, I think it's just going to take a long, long time to come. 110 might be ambitious for this year in revenue. But at the same time, like, I don't know. So we're in uncharted territory here, where Tesla's almost the Optimus thing. They're moving so fast, making so much progress on Optimus. It's been a project for 5 years, but has nothing to do with these financials yet, and won't for a few more years. So, but when it does, it's going to be the most controversial, the most insane, the most take the world by storm, new iPhone-esque product of all time, which is Optimus. And so I don't know. I just think Tesla's in such a unique situation. And the way I'm mentally preparing for it is there could be a lot of volatility it could be a very volatile company because when you have so much of the valuation priced on these growth expectations, the second those expectations, Optimus is a little delayed or Robotaxi is a little delayed, like you can have huge moves, or Optimus is ahead of schedule, it's looking dope, boom, the stock runs. So I'm going to kind of be expecting these crazy moves while we're in this period of, startup mode, betting on products and earnings that don't really exist yet, that we're waiting to materialize, which some people might say is risky and crazy, but the truth is, I feel like the Optimus program, like that's why I love Tesla. That's why I'm an investor, because they don't give a shit about the near-term financials. They don't care. They're not managing this quarterly profit maximizing. They're thinking about what technologies have value 10, 20, 50 years from now, and we're building those today. We don't care if Optimus takes 10 years and $50 billion. They're doing $20 billion of CapEx this year. That's massive CapEx. Their cash burn's going negative, and they're like, we don't care if our cash flow implodes and we're spending $20 billion because we're going for this goal. And it's very, very rare to find companies like that who are willing to bet all of their cash flows, go into the red, and develop a technology for 10 years. And with that much conviction and confidence. But that's what Tesla's doing with Optimus. And I think eventually, in my fancy model here, I have huge, and this might be too fast or too slow, but eventually I have this boom and this massive acceleration here in the company's earnings and growth, when these new products start to hit. But reality is it's going to take some time. Okay, this is just kind of funny, but for our startup of the week, we are talking about Pop-up Bagels, the $300 million private equity backed bagel startup that is not only that is disrupting the bagel with the rip and dip. That's right. I went to Pop-up Bagels. It's honestly fire. I'll try and find my video review and play it right now.
Wow, steaming. Uh-oh. Wow. Might be better than Hey Bagel. Look at that steam coming off. Oh my god. Pop-up Bagel. So fresh and light. And not too tiny, so good. Well seasoned. This would toast great too.
Shout out to Kevin for filming that. But so I went to Pop-up Bagels, great bagel. They're doing the rip and dip, which is to me, it's funny because I talk to my cousins who love bagels and they're like true New Yorkers. And they're like, the rip and dip? What the hell is this rip and dip bullshit? Like, that ain't a real bagel, blah, blah, blah. But even in Seattle, we have bagels doing the rip and dip, like Hey Bagel, which is super good. I go there all the time. But the problem with the rip and dip is it's got to be hot. It's all about, the bagel's out the oven. You just rip it and dip it in the cream cheese. Really good if the bagel's hot and fresh. Bagel's an hour out the oven, not good. You need throughput. You need high volume. Anyway, this deal is crazy to me. Tiger Global, and I've got some good gossip on Tiger Global, so I'm going to give you that in a second. But 5 times what the chain was quoted back in October. We have a quintuple in valuation. The only startup and you got the 2 fastest growing companies in the world right now, Claude and Pop-up Bagel. Pop-up Bagel, 5x in valuation in October. If that's right, that's a 6x in 5 months. I mean, how much revenue are these guys doing? Like, this is ridiculous. They're a franchise, 300 new locations as of July 2025. The brand has about 30 shops. Goal to expand to 100 by 2027. Wow. I mean, this is insane. 30 shops right now at $300 million. They're buying $10 million a bagel shop. I mean, I don't know. This is crazy to me. I have a lot of theories of this because I love artisanal food and bagels. My hot take on this is the beginning of the end of Pop-up Bagel. This is when you corporatize your food chain. This is and maybe I'm wrong on the actual financial terms of this because I had a whole theory that actually on HyperChange, there's a video on Chipotle from 10 years ago or 6 years ago or something. That's the guac turned brown, which is once the throughput, you expand more Chipotle locations, the throughput rate decreases. You have less customers per hour. The food gets less fresh and the quality declines. So I think that's the same thing for Pop-up Bagel. If you don't have people rushing through the door every minute, then you can't afford to be constantly baking fresh bagels, which means your bagels are going to sit there longer, which means you're not going to be able to rip and dip. You're going to have stiff bagels. Quality is going to decline. At the same time, your investors are trying to up the price. Then you get higher price, lower quality, less people go, margins sink. That's the beginning of the end. Now, Chipotle has managed to crush it since I said the guac turned brown, and they, corporatized and are killing it. So maybe I'm wrong on that theory. But as a foodie, I think the quality of pop-up bagels is about to decline significantly. Now, here's my inside gossip on Tiger Global. You might say, oh, Tiger Global, this fancy, they were the Tiger hedge fund. There's the Tiger Cubs that are all these incredible proteges that are making billions of dollars. First of all, Tiger Global is famous for making money in the stock market, public markets, not startups. I'm not going to be naming too many names, but I've co-invested with Tiger Global in certain times, and they are famous for overpaying at the top. Let me say that again. Tiger Global, famous for huge valuation rounds, way overpaying for already hyped names, and signaling the top of the market. That's exactly what I think happens here. Like some fancy business guys on Wall Street loving pop-up bagels and is like, ooh, what if we make this next Chipotle? Let's fund them at 300 mil. We're gonna take it to billions. They're gonna be trying to IPO this for the $1 billion bagel company soon. I don't know. Maybe, and to be honest, I like Pop-up Bagel, but it's not that much better than other bagel shops. Not even my favorite bagel. It's really not. I mean, my favorite bagel is Mount Bagel in Seattle. They're never gonna expand. They're in a house, they're not even open on Sundays, I think. They're doing their own sourdough, cold fermented 2-day bagel. That's the golden bagel in my eye. Mount Bagel in Seattle, and I lived in New York for 10 years. I've been to Cali a gazillion times. I live in Seattle now. I like to think I'm a bagel connoisseur. I love bagels. I try to eat a few a week. I'm obsessed with bagels. I got them in the freezer. But Mount Bagel, that's my go-to. Hey Bagel, they do the rip and dip in Seattle. That's also why I'm Pop-up Bagel is not going to do well in Seattle. We already got Hey Bagel. We just got the new rip and dips. And honestly, Hey Bagel, actually, I don't know. I will say Pop-up Bagel might have been a little bit better in my opinion than Hey Bagel because it the way it ripped was a little bit better. It had a little softer rip. The Hey Bagel is maybe a little too hard, but Mount Bagel is incredible. That's really the best one. But anyway, my point being here is this just cracked me up as the startup of the week. 30 location bagel chain, 300 million valuation, up 5x in 6 months. They're going to expand like crazy. You've got the most, and everyone's saying oh my gosh, this is ridiculous. It's overpaying. VCs are idiots, but only some VCs are idiots. And Tiger Global has proved to be idiots. Let me see if I can find some gossip on this online. Yeah. See, performance was strong and then brutally hit in 2021 because they got overhyped at the top of the bubble. I'm telling you. I want to dive into their venture bets here though. Early funds, strong historical track record, net IRR 23%. All right, I'm not going to lie, these numbers are better than I was thinking. Peak era funds. Yeah, see their 2021 12.7 billion, spray and pray 300 billion. Yeah. Huge markdowns. Bottom decile for 2021 vintage VC funds. OpenSea, DuckDuckGo, AI bets like OpenAI, Waymo. I don't know. Anyway, I wouldn't, even though some of their numbers are good, I wouldn't say Tiger Global is the smartest money here, but maybe I'm wrong here. Maybe I'm just, talking too much crap about the bagel industry. But I don't know. I'm curious what y'all think. Is Pop-up Bagel is this about to be the $1 billion bagel company IPO? That's going to be huge successful. Is this coming to your city? Are you hyped? Do you believe in the rip and dip bagel? I don't know. But anyway, that's my startup of the week, Pop-up. And actually, I got to say, congrats to Pop-up Bagel. No hate on them because they make fire bagels and now they have tons of money to expand and they're crushing it. So, all right, that wraps up this week's HyperChange episode. Thanks for tuning in. We're on Spotify, we're on X, we're on YouTube. I might even put out some clips of the podcast because I feel like some of the schemes get lost in, but I appreciate y'all for watching. Also, let me know what you want to see on the show next week. I listen to your comments. I know people were asking about Intel stock, and if I don't know much about it, I'm not going to cover it because I don't feel like I have a good take, but I'm listening and I love the ideas and comments keep pouring in. So like keep those flowing. I'll be back next week with some more schemes, maybe putting it out on Thursday too, because I feel like that's better than like Friday night. But anyway, hope y'all have a great weekend. This is HyperChange. See y'all next time.